And if you have questions as we're going along today, you can put the chat in the room. So as Jeff said, I'm your last speaker here for 2024. I cannot believe that in less than a month it will be 2025. I personally feel like the year has flown by. I don't know what that means for 2025. But again, it's been a very exciting year to trade. I think one of the reasons the year seemed to go so fast was there was a lot going on this year in the stock market. Obviously, with the election, we were talking about that all year up until November. So it was a really interesting year to trade. And at this point now, you've got two more good weeks, I'd say, of trading. This week and next week, with the way the holiday is in the middle of the week, I think it's going to be very low volume the final weeks of the year. So I'm very focused on what I'm doing right now today. And like I said, this week and next week, and there's a Fed meeting next week on Wednesday the 18th. So I'm very tuned into that as well. So welcome everyone. It's so great to be here with you. I'm in New York. It's like midnight here in New York because it's so dark out so early, even though it's only 5 o'clock. And tonight I'm going to talk to you about trading on the side of institutional money and gaps. I trade gaps. And I will talk about that today. I also appear on TV, I appear on Fox News, and pretty much every other channel discussing the market, discussing the economy, discussing world events and things that are going on. And obviously, like I said, there is a lot going on right now, and particularly this year. If you have questions, you can email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. You can follow me on Twitter, which is now X, Facebook, YouTube, or Skype as well. So these results are in my trading room. And actually, I didn't even update this since the 20th because I've been so busy since Thanksgiving. But I will tell you, we did Tesla today and AMD were the two trades today in the room. I have to update this and I'll put it on YouTube. But for the year through November 20th, these are day trades, so you need to have a margin account to do these trades. In other words, like if I would short 2,000 shares, that's what I mean by a margin trade. These are not options. I run a live room where I call the trades in the room every day, like I just said, the ones we did today. We're up through the 20th, $823,787 for the year. So my average risk per trade is about $3,500, okay? You can risk $500, $200, $300, $100. You can risk whatever you can afford. So there's lots of different ways that you can day trade. You can open up a prop account. You can open up a retail account. If anyone has questions about that, you can email me or ask me now as well. And then I also trade options. One of the biggest winners we've had recently has been Tesla, actually. Last week, I called the 400 Tesla calls, and it almost went there Friday. I knew it was going to go to 400. I didn't know it was going to go there right after I called it. It was really quite something to watch that. And that has been one that we've been watching. We've been long. And even I looked at it before I hopped on here tonight. That's even lifting tonight after hours, actually. So we do options too. Now, I risk more money in my options. I'm buying a call and selling it, or I'm buying a put and selling it. And again, this is not through the last 2 weeks either, but I risk an average of $8,000-$9,000 per trade in my options, so I can do some of the pricing ones. I have people with me doing one contract, okay? So at the time I called the 400 calls in Tesla, it was nowhere near $400. So you can see even one contract, if the stock moves and jumps 50 points or 30 points or 25 points, especially in like that did in a day, you can make a lot of money even with one contract, okay? So we're up over $3 million for the year with options, and again, I will finish up these stats for the year. My week has been very busy. I had my December class this past weekend, and so it's a lot. When you're trading, when you're teaching people, when you're running the room, when you're on TV, I'm trying to juggle a lot of things at a time. And I'm going to take the time here to talk to you tonight because there might be someone here that's interested in my system. And there might be some of you here that have been trading for a long time and you don't know how to trade. You're losing money in the market. It's the end of the year and you're looking back at your year and you're saying, how can I get these results? Why did I not have a good year? Or could I have had a better year? A lot of times people are looking at 2025 and they're looking at New Year's resolutions. I'm not really a New Year's resolution kind of person. I'm more a goal-oriented person. I set goals for myself. But if you didn't have the year that you wanted this year trading in 2024, now's the time to start thinking about 2025 and not only setting some goals for yourself for 12 months from now, where you want to be in December of 2025, but also what are you going to do differently so you can achieve those goals? You know, what steps, what actionable steps are you going to take so that you can achieve the goals you want if your goal is in fact to be a successful trader? So again, I have the stats in here for options and day trades. My options are a newsletter that gets emailed to you. And again, this isn't through today. I have to update it. This was through the 20th, 3847177. So, you know, I've traded since 2008. Now, when I started out trading, I didn't know what to do at all. And I lost money like many of you. When you start, you lose. You don't know what you're doing. And I very quickly figured out that there was something to gaps. So, you know, I didn't know what I was doing. I didn't know anything about gaps. I didn't know anything at all. And then I was back and forth for about 3 years trading my own money, trying to figure it out. I also figured out there was something special to shorts. So I kind of gravitated to the short side. Now I was talking about Tesla. We went long Tesla. So if there's a long setup there, I'm going to do the long setups too. But I do prefer to short. And we are going to talk about that today. But anyways, I knew there was something to shorting. And I knew there was something to gaps. When I saw how fast stocks moved when they fell, when I saw, you know, a gap, just any gap, you know, and I saw the power in the gap. And I said, this is something that I want to do. And this is something that I really want to gravitate towards. And then it was a journey for me. You know, I make it so easy for people because they can come and take my class and learn the class in 2 days. Now, it doesn't mean they'll memorize every single thing from the class. It's a learning process. You learn information, you come back, you ask me questions, and that's usually what people do. But again, it was 3 years of my life to figure it out. So I've condensed all the information in what I know into a 2-day period to help people learn it. And of course, you can ask me questions. So getting back to what I was saying, 2025 is almost here. Are you ready to have a great year? You know, I also like to make lists. Okay, I said that I'm a goal-oriented person. Having a notebook, writing things down, things you want to change, goals, all of that is good. And writing stuff down really helps you, you know, organize your thoughts and get it together with what you want to do, and particularly with trading. So like I was saying, I started trading, and then I gravitated towards gaps and also towards shorting. So what I found very early on, what the success and how to make money was really about just becoming an expert. So in order to become a successful trader and successful in the market, you have to become a specialist. And many people are all over the place trying to do lots and lots of different strategies, and then they don't make money. To make the kind of money, I'm showing you the stats and the results that we had this year in even one calendar year with the risk I stated. You have to be very good at something. For me, it's gaps, okay? So if you become a specialist in one specific strategy, that's how you're going to do it. And for me, again, it's a strategy that reads institutional money, or what I call power money in the market. This brings momentum, and not only that, it brings opportunity, which we've seen a lot of this year, okay? We've seen a lot of, actually, since the election. There have been a lot of opportunity. I mean, I can't even believe the way some of these stocks are going since the election. Every trader on every level must learn a skill set. That's how you're going to make money. And it's acquired through education, or you teach yourself. You know, like I said, it took me 3 years to figure out my system. But it's a heck of a lot easier and cheaper and shorter time frame if you can pay someone who is an expert to learn, and then you allow them to guide you on a daily basis and teach you, and you get the skills from that person. So again, I focus on gaps, but really my specialty is predicting price action, predicting where a stock's going to go before it does it. And that's something that I have focused on for a long time, but it's really the way that I read a chart in analyzing the gap that allows me to make the prediction that the stock, again, just talking about Tesla, was going to go to 400, to see that number, to see it was going to go there before it was anywhere near that number. Do you know what I'm saying? And again, it's all about price, because if you can predict a stock's going to move higher, then you would go long, you can make money. If you can predict a stock's lower, guess what? You can short. And guess what? Then you're going to make money. It sounds simplistic, but the fact is the way that you make money in the market is really getting the direction right. Now, I put in here, again, I was talking about doing options. This is another one that's insane, completely insane. It's still going, actually. I don't even know if this hit over 230 today. This was one I've really, really liked a lot, too. We did Amazon on the 7th. Okay, we did Amazon 210 calls. It expired the 15th. This is a trade already done. It's done. Cost was 275. 30 contracts was a risk of 82.50. You could have sold it for more than double. So this is a good trade. What if you did one contract? You could have paid one contract and still doubled your money. So I'm using here a beginner risk of 4 contracts. You could have risked $1,100 and made $1,300. That's a good solid trade. Now I'm just going to show here the day that we did it. Again, this was a long. So the 7th is here. Okay. Oops, where are we? Here. Does everyone see it? This is the 7th. Pushed up. Boom. And again, 210 is here. You see it? So see how it went through the strike. Again, how do you make money in an options trade? You got to get the direction right. This was a call. The stock price was higher, but it also has to go in the time of the week that we do it. So we do the weeklies. So this moved up and over and through the 210 number. Okay. And again, any questions as we're going along, ask me. So again, how do you earn a living trading? How can you be at this point where you are successful by the end of 2025? How can you do this for a living where you can work from home next year? Okay. If that's your plan, if that's what you want, or even a side income. Number one, you need a winning strategy. You got to learn it first. Very important. You're going to make mistakes if you don't know what to do. Number two, you need a supportive mentor. Do and follow. Again, I run a live room. People follow me in the room. So again, I try to make it as easy as I can for people by focusing on one stock pick a day. But again, having that person to go to and ask questions after the class or every single day in the room is important for people. A lot of times people want to know why. You know, why did this work? Why didn't this work? How did you know it was going to go there, Melissa? Things like that. And again, number three, become an expert in one thing, which I was talking about. It's about implementing the strategy, getting good, and then adding size to win big. So again, you could risk more than I'm talking about in my trades. You could risk less, you could risk more. It's not even about the size factor. You shouldn't even be taking size until, even if you have the large account, until you know what to do. Because again, you don't want to risk money until you understand it. Now, here was another one that we did. This was way, it feels like 100 years ago. We did the 280 Tesla strike calls on the 6th, which is so funny now to look at the chart now. These have been kind of pricey, but totally worth it, totally paying. This cost of this was $13. So if you did one, you could have made $6,200. This was an insane call, just like the one I just told you about. I just called on Friday. It was a 477% return on investment. So let's look at this here, 11.6. Here's the chart. Okay, here we go. So again, look at the pop. Boom. Woo! And it went up. So again, I do gaps. So let's just talk about what is a gap. A stock gaps when the closing price today, 4 o'clock the market closes, is different than the opening price of tomorrow, which would be 9:30. And so here this closed at 4 and it opened at 9:30. So again, do I know what's going to gap tomorrow morning? No, I don't. I don't know. I don't know until I get up in the morning and I actually see the gap live. Now, this is a bullish gap. Okay, I just want to point that out. You also have bearish gaps. So here's a bearish gap in Tesla. We didn't play this to the downside, but I just want to point it out. Stock closed here at 4 o'clock. At 9:30 it opened lower. And then the stock fell. Okay. But anyways, this was this trade, and look where it went. And again, take it over, see it, see where we did it and got the run up. And again, trading stocks like this, you know, we do day trades in Tesla on margin, even at the price point it's at now. But this is a lot cheaper for people to do as an option, to spend $1,300 on one contract or $1,000 or whatever you can get filled at, than buying what would effectively be, you know, 100 shares of Tesla at the price point it is now, or even back when we did it at 280 on margin. So one of the reasons people like trading options is because you could trade options with a small account. And you get one trade like this where you're risking $1,300. This is how your account can just explode. You know, this isn't every trade we do, but there's been quite a number of trades like this that we've been doing. I just told you about the one Friday. Any questions on options? Any questions on this as I'm talking here? How are we doing? Okay, I'm going to keep going then. So again, how do you make money in the market? Think about it. Well, you're like, you know, a lot of people struggle and they come to these lectures and these events and Jeff's so great in doing so many of these events and giving so much information to people to try to help them. But when push comes to shove, the only way you're going to ever make money is if you get the direction right. And that's one of the critical components of reading charts. I'm just going to go back here. Again, this is one of Jeff's charts. You have to have charts or you're not going to know what to do. It's like you're trading blind if you don't have a chart. Like, I wouldn't trade without a chart, actually. So you're a blind person taking a trade based on this thing, that thing, news, whatever. You know, you have to look at what's happening in the price. So again, going back, how do you make money in the market? You want to be able to get in the direction right. And that's what the chart tells us. Okay. So there's so much information in charts. You need it. Again, you're blind. Blind as a bat if you don't have good charts. Or any charts at all, actually. I mean, there's some people that are trading and they're just like, oh, I like this stock because of such and such thing. Or I saw it on a chat room, or I heard it in the news or whatever. And then they get in the complete opposite direction. It's about determining who is in control. If you can determine who's in control and you can get in that right direction, you're going to make money. So if the bulls are in control, you want to be long. That's what's happening with Tesla. That's how we've been making money in it. If the bears are in control, guess what? You want to be short, okay? There's another one we did. This is Netflix. Another just superb chart. If I drew this and just drew it with fairy dust, it wouldn't have looked any better than it's looked. You have to get the direction right to win. If you get the direction wrong, you lose. And again, this sounds very simple, but for some reason, many traders, and I'm just generalizing here, many traders, retail traders, tend to want to do things that are tricky in order to make money. They said, well, I'm going to make a lot of money by doing this thing. No, it's really just a factor of getting in the area of the control or of who's in the control, determining the control, and then playing it in that direction. So this is another one we went long. We did calls in Tesla. It ran right up to 900. Just took off like a rocket. And this was even before the election, actually. So remember, the election was early November. It helped move this up, but this has been just skyrocketing, okay? So again, first thing first. Number one, you need a strategy. Mine is golden gaps. What is a gap? A stock gap from the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. So things are gapping right now as we're talking. It's almost 5:30. Stuff's up tonight, stuff's down tonight. I tend to look at things in the morning. I get up early and I check and see what's going on way before the open. Now here's one that we did. This feels like a while ago. It was before Thanksgiving, but it really was recent. This was Target. Target closed here, gapped down. So this closed the night before up here around 156 and change and gapped down here in the morning around 129-ish. Open, fell off a cliff, came all the way down to 120 and change. That's a big move. So who is in control of the target? The bears. You would have only made money if you shorted it or bought a put. Okay? So every day I'm looking to find that one to predict where this is going to go. Now, I didn't know this was going to go to the piggy target of 120. I thought 125 was good. This kept going. Again, the power of the gap, and then again, also the power of shorting. So again, my strategy is golden gap. So what is a golden gap? This is the strategy that I defined and created for myself, and now I teach people. A golden gap is a gap that rates 20 points or more per the Golden Gap 26-point rating system. You take the trade in the direction of the gap. You can do the trade as a day trade or an option. Again, a lot of people want to come to me and do options because they don't have $25,000 in a retail account to trade on margin. But I'm telling you, the benefit really of doing options is not necessarily that you can trade on an account that's on cash and not margin. The benefit really of doing options is that, again, just going back here to the Netflix, the benefit is that you can hold stocks and positions in options overnight with a fixed risk, only what you have the position, and you can get extended moves, which we did in Tesla and which we did in this Netflix. So again, otherwise you're at the mercy of, if you're just buying the stock outright as a swing trade and anything could happen, you have unlimited risk. Makes sense? So that's really the benefit of doing options, even though people talk about the fact you can trade them without a margin account, but the benefit is you can hold them. Okay. Now we're talking about longs, but Like I said, I really specialize in shorting, and a lot of the shorts we did in the room and the stats I showed you actually are the trades that we did in the room were actually shorts. So we actually shorted most of the year, and I anticipate doing that in 2025 as well. You need a focus, and my focus is gaps, but it's really also shorting. So again, what is a gap? A gap is just a difference between the close and the open of a stock. You got to have a daily chart. Now, again, there are bearish gaps and there are bullish gaps. Does every bullish gap move up? No. Does every bearish gap move down? No. And that's why I designed the system to rate it and go through the process to figure it out. In fact, here's an example of one where target gapped up and fell. Okay. And so again, you have gaps happening and moving in different directions. And you have to figure out the good ones that you can get it to get those kind of big, fat, elongated bars, whether it's a red bar or a green bar. Okay, now how do I do this? I rate gaps with a checklist. With a 26-point checklist, this is what I developed over 3 years. And now this is what I do every single day. And again, this is what I teach people. So, it's very, very interesting when you are looking and trying to figure out every day what to do. Most traders are scrambling for the first half hour out of the day trying to figure out what's the market doing and what do they want to do. I'm usually done 5-10 minutes into the open. I know what I want to do before the market opens, and if I don't want to do anything that day, if there's nothing good, I don't trade. So again, I'm very, very focused, even by 9 a.m., even before the market opens, what I want to do and what direction I want to do it, or if I don't want to do anything at all. And again, that allows me to take the trade and get in and get out very focused and in and out quickly. Again, trying to hit a bullseye. Very, very focused, because that is what you want to do. The idea of trading all day, you're just going to chop yourself up. You'll make money, give it back. And of course, your brain gets tired. As the day goes on, your brain gets tired and you don't make good decisions. So having the rating system helps me determine who's in control. It also gives me something to focus on and follow. And a lot of traders need that. Human beings need that. And again, that's the great thing about being in the room. When people come in the room, they are there following me, and that helps them stay focused as well. Okay, so let's get back to talking about gaps. So gaps happen in the market on a regular basis, almost every day. However, some gaps are better than others, and some gaps are nothing gaps, and some gaps are very powerful displays of institutional money. The most important gaps of the market are gaps that signify a change in direction or a bigger move in the same direction. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. And that is how you know when the power money will flow to pay you. Because again, power money controls the market. Power money controls the market, and it controls stocks, okay? And it will always, always, always be the case. So even if you think something is not in control, it actually is. Do you know what I'm saying? So again, it's one of these things where if you're focused on an institutional money, it will really, really help you. I'm reading the footprints of institutional money, but I'm really reading it in the gap, okay? So if you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction and get out after the move happens for profit. But you have to understand how to trade with this side of power, and you need to know how to find it. And this is what I do. This is what I do early in the morning, and then this is what I teach people in my class to do for themselves, even though people are coming into the room and following me. Knowing how to read what institutional money looks like is essential to becoming a successful trader. And you can win big trading on this side of power. That's how some of these trades that I've called are 400% return on investment trades, which really can absolutely make someone's week and month, whether it's with a small account or a big account. And again, what do I mean with institutional money? So we did a bunch of different strikes actually, but we did the 400 calls in Tesla on Friday the 6th, and it went there. It was there today. I mean, it was just a really good call. And so how did I know that this would keep going? How did I know it would get to that number? Again, experience, reading the gaps, rating the gaps, reading the price action, seeing the control. A lot of times people are trading and they get tripped up and they say, oh, they're against you. No one's against you. The market's just doing its thing. It's just moving and it's just doing its own thing. Again, if you're trading blind and taking ideas from strangers in chat rooms, or not even following any strategy at all, or just trying to buy every dip or wait for pullbacks, you're missing huge opportunities, and you're not focusing on the right things or the right aspects, and you're not following the right people. It doesn't mean that you don't make mistakes sometimes, or you have to learn things, and it certainly doesn't mean that every trade works. Not every trade that I take works, but more work than don't. And that's how you know that you have something good. And then, of course, you have some that are just absolutely monster winners. And then that's how you can put together some real numbers. So becoming a successful trader and investor requires becoming a specialist in defining where the institutions are buying or selling a stock. Because again, they're the ones that are controlling the money in the market. Learning advanced technical analysis is required. Like I said, otherwise you're trading blind if you don't have a chart. And you have to know what to look at on the chart. If you have too much gunk on your charts, you're not going to focus on what you need to be focusing on, which is exactly the price. So again, like I was saying, this means reading price action in charts. So comprehending how to read, define, and trade with this power will have a huge positive impact on your profitability as a trader. Elevate yourself, your trading, and your profits to a higher level of consistency and success by learning how to read the footprints of institutions trading in the market. Again, this was right around that same week. We did the 775 Netflix calls. Again, look at where the stock went. And even though the stock is expensive and it moves, this is, for the stock to move 150 points plus in a month's time is still insane. It's insane, actually. And it's a good sign for really what's to come in 2025, because we're going to see a lot of big moves in 2025, not in everything, but in certain things. And also we're going to see volatility too. And interestingly enough, I thought this was cheap, actually. One contract cost $10 at the time we did this on the 6th. We did the 775 Netflix calls. Again, this expired already. If you did one, you could have made $5,200 or 529%. So let's look at the chart. This was on the 6th. Here. Boop. Look at it. And again, this was one, it just kept going. Just kept going. I didn't look at where this closed today. But again, this is crazy. This is all money. Money, 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 if you're in the right direction. And that's how you can get these types of trades where you're making over 500%. So again, for one person to risk $1,000 in a $5,000 account or $10,000 account, this is what people need. People want to do crazy trades when they have small accounts, but really they should be doing even more quality trades, not crazy trades. Do you know what I'm saying? You need to pinpoint to find these to really build up your account to get somewhere, not doing crazy, crazy, crazy trades. So you need conviction to make money, and you get that from understanding why. I get everybody just wants to take trades and make money and follow somebody in a room. And again, I allow people to do that join my program every day. But if you get why, if you can see that, if you understand that, like, why is Tesla going to go to 400? Why is it going to keep going? Why is Netflix up? Like, why is this going? That if you understand why something's going to happen, it just really helps you. And it can definitely make a difference whether you hold something or get out of it or even take it at all. So again, I do this using a 26-point checklist, and this is what I teach in my class. And when you think about it intellectually, you're like, oh, this totally makes sense. If I take a trade and I'm in the right direction, I can easily make money. I have to be on the side of the control. So first things first, let's figure out, how do you figure out the side of the control? And that's what I do. And that's what I do with the rating system. And I rate gaps. So gaps are the most powerful show of price action in a chart. Gaps have large moves. Gaps can move up or down. Some of the biggest momentum moves in a daily chart come from a gap. When I trade, I'm really looking for and trading momentum. And then whether you have a small size or a large size, you will get a good risk to reward. So a lot of people like to follow fundamentals. I get it. We should talk about the Fed meeting that's happening next Wednesday. But sometimes things don't go the way that you think based on what people say, even in the earnings or in these meetings. If you look at the price of the chart and you can read that, that's all that counts. That's all that counts. It's not about, oh, what is he going to say? And you don't even know. And even if you knew, you couldn't predict the market's direction or outcome in that. It may be different than what you expect. So one of the reasons we sold off today was we had data out and everyone thinks that he's not going to cut rates, you know. So again, these are theories and opinions. The price of a stock, the moment that it's trading, when the market's open or even now, tonight, that's what we're priced to be closed out. What price is it trading? That's not a theory. That's not an opinion. Again, it's so critical to have live data and charts and good charts, because that's where you're going to get the information, not theorizing and making opinions. I go on TV, I give my opinion. And very often I have a different opinion than somebody else. Who's right? Whatever happens after the person says in the future. But for the moment when we're trading, all that matters is right now. We got to be right today. I have to be right this week if I'm in trades that expire on Friday. That's it. I have to be right exactly and as soon as possible. So it's not about opinions. It's about looking at the price and figuring it out, okay? So a big flow of money going in a certain direction is what moves the market stocks, creates momentum, and sets the trend in charts. When you're looking for institutional money, you're really reading the side of power in a stock. You want to be in the side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. Even if you think it's not, guess what? It is. And this is where people, again, get tripped up, you know, because you're like, oh, I thought this was going to do this, and then it did that, you know? So number one, you need a good strategy. And number two, you need a supportive mentor, which is me. You do and follow. Again, I call the trades live in the room. If I'm saying 50 by 80, you're doing it with me if you want to do it, okay? And, you know, again, the newsletter I do goes to your email. It is an options newsletter that gets emailed to you, but the day trades I call live in the room. But it's just the consistency. The consistency, it counts. It's not about sitting for 6.5 hours and trading all day. It's about getting winner, 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 winner. Everyone has occasional losers, but any strategy does. There's no 100%, but you want to have way more winners. When I get up in the room in the morning, I don't think I'm ever going to lose. I expect myself to win. In fact, people log into the room expecting me to call a good trade. That's how well we're doing this year. They expect to win too now because they're in the room with me. And that's a beautiful thing, because again, if your mind is focused on something positive, you're going to create that. If your mind is focused on something negative, like losing, guess what? That's what you're going to create. And particularly this time of the year, we were talking about it, you know, I'm the last speaker for Jeff, and it's December, and we're getting into the end of the year, into the beginning of 2025. If you don't change something that's in your mindset, you're going to carry whatever negativity you have about trading the market or your results for this year, or whatever strategy you're doing, and you're going to carry it into 2025. The interesting thing is, as long as I've been teaching people now, I have been teaching people for quite a long time, as well as trading, more than 10 years, 13 years, going on 14, I'm teaching people. I have realized that traders will carry negative thoughts about classes they took, that they lost money, didn't learn anything, could be 25 years ago. Trades they did 35 years ago. They're doing a disservice to themselves, and the only person they're hurting is themselves. I mean, and again, if you don't let it go and have amnesia, you're not going to be able to move forward and be successful. You know, it's like people who have, you know, they get married, they end up getting divorced for whatever reasons. You know, they've got to move forward. They've got to get over it if they want to fall in love again, or get remarried, or have a future partner. You've got to be able to move past things. And the earlier in the year, the later this year, the sooner you can make those changes in your mind and carry them through into the next calendar year. There is significance in that. Numbers are really magical, magical things. Somebody said to me, well, how did I know that this was going to go to such and such a number? I said, because I do. Because it's the magic of numbers. And sometimes once you're trading for a long, long time, which I have for 17 years, and you understand the magic of numbers, which again, I'm reading in the chart, you will see how stocks can move and how things can go to certain places. And again, sometimes it doesn't add up with the fundamentals, because it's not about that. It's about emotions, or people when they're investing their money and they're trading the market. One of the reasons why we've had such a big rally and why the market's kept going recently is obviously we've had a lot of optimism, and there's change in the air going into 2025 with a new administration. What will become of it? Nobody knows. But for now, it doesn't even matter. It doesn't even matter. We're still in the same administration. It doesn't even matter. People are feeling optimistic. And so they're buying stocks. and they're buying the market. Any questions here as I'm going along? I don't want to talk too fast. Just realized that. Are we doing good?
Well, I think you're doing awesome.
Oh,
So,
thank you.
but I don't see any questions yet. If you have
Jeff's
questions
listening to
for me,
me.
let us
Jeff's
know.
like,
We also,
talk
if you're
more.
going too fast, I don't want you to be worried about time because we can end whenever you're done.
Oh,
So, don't
okay,
worry.
that's right. I'm the last person. I forgot.
Yeah.
Wonderful. Anyways, getting back to the idea of trading is about consistency. It's kind of like if you did a sport. You know, when you start in a sport and you're learning a sport, if you're new to golf or swimming or anything at all, baseball, basketball, football, you practice, practice, practice. The more you practice, guess what? The better you get. It's the same thing about consistency in trading. And like I was saying, one of the biggest issues I think with many traders is they jump around for too many different strategies or systems, so they never get consistent in any one system, and therefore they don't see the consistency in their P&L because they're jumping around too much and they never become an expert in anything. Okay, but think about it, just like in life, in any profession or sport, you would have to do it and practice it a lot to get good. It's no different than trading. So let's take here a look at the target. This was the target day trade that I did on the 20th. So here's the gap. Stock closed here, gap down, open, dropped. Entry was 127.50, shares was 1,500, risk was 4,200, exit was 125.50. And again, this went all the way down to 120 something. It didn't break 120, but I could have made another $5 on this. But I did the trade quick, in and out, and I made $3,000, and it was a good trade. It was a good, solid trade. Okay. So anyways, this is what I look to do every single day in the room. And if I don't find anything, then I don't trade. I'm focusing on quality. You know, again, it's looking every day and being prepared before the open. Otherwise, you're just 50-50 crapshoot. And then you're not going to see, like I said, the success. This is another one we did, AMD. We did this today, too. We did this today. You can pull up the chart of this today. I don't have the chart of this today in here, but the stock fell today. This was a good gap today. We did this on 10:30, right here. Stock closed up here, gapped down, open, dropped. Boom, boom. See where we are on the 30th. Entry price was $149.95. Again, looking for $1, a little bit more. Exited at $148.50, made over $4,000. This continued. So this actually went past that number as well. But we did this today. If you have time, you can pull it up. Again, this was a nice gap. So again, these are trades on margin. You could have bought a put in this today, or you could have bought a put in it today, but you could have bought a put in this the day that we did it on the 30th as well. So like I was saying, people enter my trading room every day expecting to win, and that is a mindset. And I think that if you're in a trading room right now, or if you're trading alone in your own office or home, and your environment is not positive, you know, if you have a spouse and they don't support you trading, don't discuss it with them. Same thing if you have friends or family or whatever. You need to be in a very supportive environment, even if it's by yourself, you know. And again, get into a trading room that's a supportive environment because you want to win. You have to be calm, relaxed, focused, and ready to go every day. And you should know what you're looking to do. And you shouldn't be over trading either. You should have to go into the market expecting to win and be successful. And that's how I look at each and every day. Here's another one we did, IBM. This was 1024. Stock closed here, gap down, open, dropped. Okay. And again, boom, boom, boom. Could have bought a put in this, could have done a day trade in this. Again, 219.10 was the entry. We added it to 18.75. I really like this. Total shares was 2,400, and then I exited at 216.40. This was a good, solid trade. This kept going too. So this was $6,048 on the day trade. Again, this was here. Now you could have bought a put in it too. Could have got in, got out. Could have bought a put here. Could have held it. Look where it went. So again, how you choose to play the gap. Again, I do both day trades and options. But how you choose to do it depends on what type of account you have, whether you feel comfortable doing trades on margin or options. Okay. But every day in the room, I'm calling day trades. The room is not an options room. The newsletters, on the options newsletter, you get, like I showed you the newsletters that we did in the Tesla, for example, where you get the trade and you take it when you get it. And we're doing calls and puts. You have to think of it like you're making money on a regular basis. You chunk it out. We're doing the weekly options in the room. We're doing the day trades. We take the trade, we get the move, get out. That's why many of these day trades, even the ones that I showed you here, even in this lecture, I could have held longer. It's not about that. It's about the consistency, the wins, getting the move fast in the morning and getting in and getting out and working smarter, not harder, because I don't want to sit at a desk all day for 6.5 hours. Again, I'm trying to take the options to get a larger move. So like if I want to hold IBM, I'll do the day trade quick, buy the put, let the put ride. You know what I mean? And then I don't have to worry about sitting and babysitting a day trade all day. And the other idea about working smarter, not harder, is that you can have a better quality of life doing other things with your time. Maybe that is another job. Maybe you are still working full time. Maybe you're working part time. Maybe you have a family. Maybe you're retired and you want to go golfing in the afternoon. The idea of working 40, 50 plus hours a week is exhausting in today's environment with the stress and everything else. Trading is a nice lifestyle if you can master it. And that is a lot of the reasons that people decide they want to do this. They want to work from home. And then, of course, people have big ideas and grandiose ideas about making a lot of money and becoming rich. You can. I mean, you absolutely can. But the fact is, you're never going to get to achieve those goals if you don't become good. And it's not about reading a million books. And it's not about doing a million different strategies. And it's not even about doing a million different trades. It's about becoming an expert in one thing and narrowing down and pinpointing it down and getting the consistency down. And then, of course, adding the size. Adding the size then once you're good at it. So I was talking about this, about why is shorting the way to go for fast profits. Again, we shorted AMD today. It was a nice trade. The panic comes in, panic comes in and stocks move fast. I mean, no one's thinking hard about buying a stock. Panic buying is something that's rare and happens not that often, okay? But panic selling actually happens quite a lot. And so we're looking to capitalize on that often. I don't know what we're going to do tomorrow, but hopefully we'll get a good short tomorrow. So number one, the strategy. Number two, you need a good mentor. And then number three, like I've been talking about, you need to become an expert in one thing, and you need to focus on one thing, and preferably one strategy, and also even one stock. Again, you can play it two different ways if you want. That will help you be consistent. That will help you achieve your goals, whatever your goals happen to be, whether it's making 50 grand a year, trading on the side a half an hour a day, 100 grand a year, or whether you want to do this and really go full on, like I decided to do a long time ago. Again, I wanted a brand new career. That's why I got into doing this. I was doing mortgages and I was working far too many hours, and I didn't feel like it paid me anymore. I was probably making, by the time I quit, $5 an hour for the time that I was working. You just get to a point where you want to do other things with your life. You want to have a better quality of life. And a lot of that has to do with, again, the amount of time that you spend at work. And if you're stressed out and spending too much time at work, it takes away from your happiness and the quality of your life and things you want to do to spend time with yourself and your friends and your family. Okay? Any questions here? How are we doing? Everybody good? Okay. So getting back to what I was saying, one of the cornerstones to everlasting trading success is consistency. Without this, it is hard to stay in the market for any length of time. In order to be consistent, a person needs proper focus on what counts. And for me, I focus on stocks that are being moved or controlled by institutional money. How do I determine that? I rate the gap. So how are you going to know what stock to trade each day? You get up in the morning and you rate it, okay? And that's what I do. That's what I do every day, and every day I'm looking at different stocks. And I'm looking to find the power of money in the rating system. And then I take the trade into the open as a day trade quickly between 9:30 and 10, or as an option, okay? And that's what we did with Target. We actually bought a put in Target, and we did the day trade too. And then we were in and out, and it worked, and we were done. And again, one a day is all that you need. So it's about learning the checklist, because gaps have to be qualified, because you can't just short every down gap. You can't short every up gap. Gap fills don't work. If anyone's told you that, that's not true. So you will learn the checklist if you come to me. This is what I do. Okay, this is the information. The checklist tells you what to look for in the price of the stock to know who is in control, to know if the bulls are in control or if the bears are in control, so that you can know what direction to take it. There's only one thing, and one thing only, that can move the direction of a stock, and it's money. And it's not a little bit of money. It's actually a lot of money, or what I call power money in the market. Power money is in charge. It's always in charge. Power money is in charge of the stock's direction, and trends are set and moved by the power money people, of which there's a lot of in the market. And that's why the market has so much volume. That's why people love to trade the U.S. stock market compared to other markets in other countries. The U.S. market has large moves, stocks have large move, and the indices do too, and they have a lot of volume. And the amazing thing is, negative as traders and analysts talk about the power money people. They're the reason that one individual can be successful in the market, and why you can take one contract and make $5,000, $6,000. And you can do that on a regular basis too. You have to find the good gaps, okay? So getting back here to the target, again, earnings season for 2025 starts in January. We're at the tail end of earnings season now, and then we have the holidays. But this was an earnings gap here in Target. And many stocks gap for earnings, but they also gap for news. They also gap for data points. They go with the market. So there's lots and lots of reasons why a stock will gap. So we have a fair amount of gaps in a week's time, but they're very, very important, okay? And a lot of people just don't understand gaps. And once you understand how valuable they are, it will help you become profitable. And you will help you pinpoint and read the power of money when it sets up. And then, of course, this is going to help you, give you conviction to take the trade, to hold the trade, and then to take more size, so that you can make more money. Seeing when and where the power of money positions are getting in is like finding a gold mine. Seeing gaps clearly in how they're creating trends, changing trends, and making momentum is a powerful way to trade. You can use this information to enter trades yourself so you can get paid along with the power money moves, okay? Now, I have talked about this before, I think, in other webinars here, but this is particularly important at the end of the year going into 2025. Again, talking about clearing out all the negativity, clearing your energy to go into the next year. And what do you want to do? Think positive, and you want to level up. This just applies to everything in our life. It's not just trading, it's everything. Too many people trade on the fly, and they're not interested in really getting good. They just don't even care. They're just greedy, and they want to make money. They don't really want to get good as a trader. If you get good, then the money's going to come. And you only get conviction if you get good. Otherwise, you have no conviction. So leveling up means take it to the next level. Pushing yourself to the next level, whether that's studying, learning information, getting good at charts, doing something different, learning a new strategy like mine, following someone new, doing something different. And then again, letting go of the past. You have no idea how many people are following me, and it's kind of interesting now because, again, I started the business in 2012. So now, going into 2025, teaching people for this many years, almost 14 years, you have no idea how many stories I've heard from people about they did this, they did that, whatever, and they just can't let it go. It's like, if you're holding on to something for weeks and months and years, it's holding you back. You're holding yourself back. And again, this is a good time of the year to just cleanse and move forward so that January 1st, you're at a new space and a new place, mentally and physically, and then you'll be there financially. Because what happens, the change has to happen in your mind first. You just make the decision that you're going to do something different. You just decide that you're going to do it. And then things start to happen. And that's really where it all is. So the system tells you how, what, and when. How do you make money in the market? Trade a strategy and system that is profitable, extremely important. Golden gaps are a highly profitable strategy because they focus on large momentum to trade. And what stocks should you trade? Stocks that gap and rate 20 points or more. So my system is based on 26 points, but 20 is a cutoff. I don't have to have a perfect score, okay? I'm always trading the gap in the direction of the gap. When do you trade them? Early in the morning when they set up and trigger. That's what I'm looking to do always. And you must have a structure in place in order to make any money at all consistently. It's really about the consistency that many traders lack in their systems. I think anybody that's ever traded probably has made money doing something at some time, in some trade, and that's what gets people excited to do it. But you have to make money on a regular basis. So people make money, lose, make money, and they're up and down all over the place, and that will wreak havoc on your mental state and your account as well. And you kind of got to be honest with yourself and say, wait a minute, I'm not making money, I'm not getting somewhere with this, and I have to do something different, you know? But anyways, how do I know ahead of time where stock will go? I rate the gap. And this is what you'll learn if you come to take my class. My next class is not till January. We'll talk about that in a minute here. But I use a 26-point checklist. This checklist tells me what to trade and what to look for each day. So it's a rating system. It measures gaps by rating them on the daily chart to find stocks to trade that have, number one, a high probability of directional bias for the entire day, ideally like the Target or like the Tesla. A big move on the day, we want to. Early confirmation of the bias in the move between 9:30 and 10, and precise entries with follow through and a good risk to reward target potential. So what do I think is a good risk to reward? If I'm risking $1 to make $1, if I'm risking 50 cents to make a buck, okay? If I'm risking 25 cents to make 10 cents, you know, I'm looking to try to turn it over 100% is what I think is a good trade, 1-to-1. And then you also need to create a money management plan for yourself. Again, how many trades do you want to do a day? How many trades do you want to do a week? What's the size of your account? Are you going to do options? Are you going to do day trades? All of this, you have to get organized for yourself, okay? This is a chart of the QQQs here. Again, I think 2025 is going to be a big year. Again, whether the market rallies or falls, nobody knows. But I think it's going to be a big year, because there's going to be change happening in the universe in 2025, change in a new administration, and the market's going to have reactions. And we want to be able to capitalize and profit on those reactions. Some of them could be to the downside. Some of them could be to the upside. Right now, a lot of people are long the market. Even after today's sell-off, a lot of people are long the market. And they think the market's going to keep chugging up higher. Maybe it will, but what if it doesn't? So people are making money now if they're going long and they think they know what to do, just because the market's been moving up. You have to know what to do under any market conditions. You have to know what to do when the market's bullish, when the market's bearish, and particularly what I'm looking for every day is stocks that don't even need the market. I can tell you right now, Tesla would be flying without the market, hands down, okay? So in reality, I don't need the market for my trades, but I sometimes do trade the market. Someone's asking a question. Do I have any losers? Yes, they were in the stats. I just had the stats at the beginning, Jack. Maybe you weren't here. I'll go back to the beginning of the lecture. I had all of the stats through 11:20, and the losers are in here. I just talked about this. See the parentheses? Those are losers. Now, we have been on quite a tear, I will say, in the trading room. But every trade with a parenthesis is a losing trade. So 11:15, we did BA. It lost. I don't have the chart in here. You can look it up. Look at the chart. And then we did Disney. 11:13, NVIDIA lost. And then I did Boeing. 11:06, lost in Tesla. Won in NVIDIA. So all the losers are in here. You can't expect to win in every trade. I talked about that earlier as well. That's unrealistic. Again, if anyone tells you something has, 100% win ratio or something like that, that's just, I would be a psychic if I could do that. I'm pointing out certain trades that we've done recently that have gone way more than I thought that they would, or very fast to the target, like I talked to you about the Tesla call from Friday. But that has nothing to do with the fact that there are trades that I take that lose. And you have to be prepared for that. Otherwise, I wouldn't use stops. So I teach people to use stops, and I use stops myself in the day trading room. If I didn't ever have any losers, I would risk my whole account every trade. That would be absurd. You can't do that. You need to size yourself accordingly. You need to put in a stop, okay? And you need to honor that stop as well. You can always do a retake. Say you take a trade, you get stopped out, and sometimes I do. If you want to go back and look at the stacks, sometimes I've done the same thing twice in a day. Took a stop, retook it, second trade worked. But sometimes I don't. Sometimes I just get off of it. But again, my win ratio is probably between 70 and 80%. So you come and trade with me, you figure every 10 trades, you're going to have about 7 winners and 3 losers on average. And maybe sometimes it's higher than that, where we have, Maybe it could be 80%. But again, that's the sort of thing that I'm talking about here, where we're talking about people's mindset. I never said every trade that I do works. That has nothing to do with the fact that I have a good system and I take a lot of trades that do work. If you're trading expecting any system where every trade to work, you probably can't afford to be taking risk, because you can't afford to take any losses at all. You probably can't afford to be risking money trading. If you open up a trading account, and I don't care if you do $2,000 in an options account or you put $100,000 in a retail broker or open up an account, every time you take a trade, there's a possibility that exists that the trade could lose. You could take a good trade that I call and you could screw it up. You could knock it. How? You could knock it out. You could be so piggy about it. I could call a huge options trade and you could knock it out of it. Hold it to the last day, even though it's up all week, and knock it out and losing it. So again, you have to be responsible with your cash and with your profits. And that has to do with sizing yourself correctly, putting stops in, taking risks. I think people are all over the place as far as when they are using stops, because they're afraid to take a stop because they don't want to take a loss. But when I take a stop, I don't like taking a stop. It's not like I don't expect myself to stop out. I expect myself to win. I talked about that. But I put the stop in anyways, knowing, again, that it could stop me. But the reality is that anytime you take a trade, you're looking for high odds. 26 points is what I look at on a chart. If I get 20 or more, I'm going to take the trade in the direction of the gap. That's a high odds in my favor, the way I look at it. And I say, therefore, this trade is worth risking $3,000, because I think the odds are in my favor that I could turn that $3,000 into $5,000. And that's how you have to look at it. If you're taking a trade and you're risking $3,000 and you think you're going to lose the $3,000, you're down from the start, because your mental point is that you think you're going to lose, or you're afraid you're going to lose. A lot of people trade and they're afraid all the time that they're going to lose. You can't be afraid to lose, because in fact you will have trades that lose. That's my whole point. But a couple of losers should not kill you, shouldn't blow up your account. Why? Because you should still have more winners than losers. And that's how you make it. That's how you make it in this business. You can't have too many losers. That's just the way it is. And again, to be honest with you, over 70% win ratio, those are some pretty fat numbers. I think I talked about this. Measures gaps by rating them in the daily chart to find stocks that have a high probability directional bias. We did talk about this. We talked about 2025. This is me. I did a class live in New York, actually, in September. I had people come. They met me. It was a good lecture. I do not have any live classes planned in the future. Maybe I'll do something, but at this point I don't have anything planned, so the classes I do are online. So the next class is not until January 2025, which is a long way away, but if you want to sign up for the January class and start trading with us, you could. The January class is January 25th and 26th. And again, you're closer to realizing your dreams than you think if you've been at this for a while. It's real. I mean, I got a really nice email from someone today. Actually, he emailed me after he sent this email. After he sent this email, he emailed me. He was up over $9,000 for the day. He just did the class this weekend in December, and he paid for the Black Friday bundle I did, which was $79.99, and he emailed me. He was up $77.25, but then he emailed me later. I didn't have time to put in it. He was up over $9,000. He's going to be one of the traders that we highlight this week in the marketing list. Someone's asking me something. Do you trade more on the long gaps or on the short gaps? I do more shorts, but recently I've been going long as well because the trades are there. So
we have another question.
Go ahead.
If you're answering questions right now.
Yeah.
This one's from YouTube. Do you pay attention to after-hour gaps?
Any gap, anyone, anytime at all. So yes, but I'm a morning person, so I typically do my ratings in the morning. If like I won't do my pre-work tonight because I'm a
Okay.
morning person. But any time something's gapping is essentially a gap. But as far as doing the rating, I will wait to do it in the morning. Like this is late for me. This is like midnight for me to be here with Jeff right now. Because I'm like going to bed after this actually.
I hear you. I'm migrating that way too.
And then I think I've talked about this picture before in the last webinar I did with Jeff. I saw Bill Ackman at a restaurant in New York, and it made me think about again how many successful people there are in New York City. You know, New York City has its share of problems for sure, but this is still a metropolis, and there's still so many successful, wealthy people here, so many businesses in New York. That has been very grounding for me and motivating for me. And so if you are wherever you live in the world, you know, you want to be around successful people. So again, if you're in a trading room, you want to be in a trading room that's succeeding. If you have a mentor, you want to be with a person that is successful. You want to gravitate towards people that you could admire and learn from, and that again have this good energy where they're going to support you and that can motivate you to get to the next point in life. You know, you have to look at trading as something where you're practical and professional. And that's why I do the prep work. Like I said, I do it in the morning. The system I use to find the right gap each day is called the Golden Gap. It's a 26-point checklist, and this is about empowering yourself to trade today. So if you come and do my class, you will learn the rating system. You will learn all the entries, the exits, the targets, and you will learn it in the Golden Gap course. This is a full 2-day course on how to strategically find, pick, and play stocks that are professional bearish gaps. So the class for January is the 25th and 26th. I'm doing a special through 12/15 for the January class. If you sign up for the combo, you get the Trends class, the Golden Gap, and the Merry Christmas special is you will save $1,000. So you will only pay $69.99 when the normal tuition is $79.99. And then the Trends class is January 28th. And as a bonus, as a Christmas special, you will also get the Market Report subscription and the Trading Room subscription and the newsletter subscription free for 1 year. So you get 2 classes, 3 subscriptions, and you save $1,000 in the price. Any questions so far? How are we doing?
I think we're caught up on questions.
Okay. Okay. Well, thanks so much for having me, Jeff. I guess Merry Christmas to you.
Yeah, should I wish you a good night?
I know.
No, great job. So you can email Melissa at thestockswoosh.com to do that. Melissa, great job. I appreciate that.
Thanks. Have a good evening.